Alrighty, good morning everyone. Hope you're doing well. In today's daily analysis, what we'll be looking at is breaking down the non-farm payroll numbers that we saw on Friday last week, looking into how it could affect the FOMC rate decision coming up not soon, but on the 18th of September. Right, and with that, we'll also look at any possible trade setups that we could have for today and into the week. But first, right, I hope you've been well. I hope you can hear me okay, see me all right. Put it into the chat and let me know. Now, welcome again to the daily market analysis. We had a very odd, a very odd non-farm payroll on Friday last week, right? Markets shot up, shot down, didn't do, well, did a lot, but also didn't do too much. I didn't get into any trades with the news from last week. So I hope you've been trading well. I hope you've been trading okay over the non-farm payrolls. I hope you had a super weekend. I had a very relaxing weekend. So let me know how you went on the weekend. Okay, but before that, a big good morning to Diana. How you doing? Lily's first, Diana second. Hey, Augusto, hope you're well. Good afternoon. Hey, Stefan, how you doing? Right. As you stream in, if you're on the session, do drop a message, say hi, let me know where you're joining us from. And for all the regulars, a big welcome back. Thanks again for joining me. You can help me out massively by remembering to click on that like and subscribe button. That would help massively. And if you have any questions at any point in time, please feel free to put it into the chat and let me know. Okay. If it's all good, I'm assuming everything's working fine. Super. Okay, thanks for that. Hey Edwin, how you doing? Good morning. Now, I've lost my train of thought. Okay, now with all that said, let's have a quick look into what happened on Friday last week. Right, so on Friday at 8:30 p.m. GMT plus 8, I was sitting there at 8 o'clock. I saw prices starting to sit and then starting to move. Looked like I was trying to form a setup. And then at 8:30 p.m. GMT plus 8, we saw the US non-farm employment change. It was, nope, when I can click on it, it was a 114. Very oddly, it got revised down to 89K. Remember, I was talking about this last week where I was expecting that number possibly even sub 100. That didn't happen because that kind of got revised down to 89K. They were expecting 164. It got released at 142. Right? It got released at 142K on the non-farm employment change. Again, this would be below, or this is below the forecasted number of 164, but above that 89K number and above that previous of 114K, right? So generally, although it is a weaker number, although it is not as good as expected, it is still better than previous. It is still better than the revised number. So that caused that big spike up and then the big downward move again on the dollar index, and then the continuation back up. We also saw unemployment rate for the US drop slightly from a 4.3 as expected down to a 4.2%. So unemployment rate slowing down slightly to 4.2. Non-farm employment change not doing as well at 142, but still a little bit better than previous. And then average hourly earnings was 0.2%, expected at 0.3, came out at a 0.4. What all this resulted in with onto the dollar index, as you can see here on the dollar. I'll zoom in a little bit more. okay, on release of the news. So we were right there. So it was pushing up through the day, right? Pushing up through the day at 7. I thought we are going to see a push to the upside. We were right at 101. We're just slightly above 101 on release of the news, or just before the release of the news. It pushed up. This was at 8 o'clock to 101.20. It came right down to the support at 100.55, rejected that support, was way outside the Bollinger Band, came right back in again, and then at 9 through 9 o'clock pushed up as high as 101.40, came right back down at 10, at 11, tested that area again, and then now pushing to the upside. Okay, so then after that it set across through the night, and then through today started pushing to the upside. That's on the dollar index. So to a greater extent, to more volatility, it kind of went according to what we planned, right? So I was looking for it to push up and then come back down to test this level and push up. Remember, I was talking about it to test that trend line, come back down, and then break out on the 18th where we have this line, this red line here. But it's done that a lot earlier, a lot faster than anticipated, pushing up, coming back down to bounce off the support, and now push up towards that trend line. So I'll take all that away. That's still a good level to pay attention to, although I don't need that area. We'll take those away. Okay, so that's what happened. That's what has happened, or what did happen, with the non-farm payrolls or non-farm employment change with the on the dollar index last week. Any questions on that so far? Let me know, put it into the chat. At the same time, we did see Canadian unemployment rate rise from a 6.4. They were only thinking a 0.1% rise. It went up to a 6.6% on the unemployment rate, while employment change didn't go as high as anticipated. It went to a 22.1 instead of a 23.7. All right. Prediction was precise. I kind of got it. Not exactly, but kind of got it right. Got lucky there. I always say I got lucky when it comes to a prediction because it is really a best guess scenario. Okay. In the meantime, hey Angel Case, how you doing? Good morning. Hey Owen. Hey Noah Chuku. Hope you're all doing well. Welcome back again. Right. So with all that said, what's I going to do? Oh, one more thing. I can't remember why I closed that window, but you see that because of the news, that 142 on the non-farm employment change, that 4.2 on the unemployment rate, right? The unemployment rate going from 4.3 to 4.2, it shows like employment numbers are weaker but not as bad, right? At a 4.2, while non-farm employment change had that drop, well, not as expected, but still 142, still more than that. So because of that combined, what we are seeing right now is the anticipation that the Fed Reserve is less likely, not saying that they won't, not ruling it out, but they're less likely to cut rates by 50 basis points. There's a 27% chance of that happening, but they're more likely to cut rates only by 25 basis points, with a 73% chance of that happening on the 18th of September. It is the 9th today. There is still 9 more days to go. A lot of things can change, but for now, it is at a 73% chance of a 25 basis point rate cut. And because of that, that's also one reason why we're seeing the dollar push to the upside. Remember, I've been talking about the whole priced in scenario on the dollar index as it finds that low, with markets having anticipated a 25 basis point rate cut for a very long time now. It does look like prices are bouncing back up because of that priced in scenario and the anticipation. Okay, so that was all last week. We're done. I hope you all traded well. I hope you traded with good profits. I didn't get into any trades on the non-farm. I saw prices shooting up and down. I'll show you more in detail shortly. But it just didn't make sense to me at that point. It didn't trigger any of my levels. I didn't get into any trades. It actually triggered one of my levels, but I missed out on that. Okay, I'll show that to you shortly. Through to today, this morning, 7:50 a.m., we had the Japanese with their final GDP at final GDP quarter on quarter at 0.7%. A slight slowdown. Didn't do too much in terms of affecting the yen up until now, where you see it starting to push up. Okay, I saw the yen bounce. It's not so much because of the GP number, but more because of a reaction to a support. So nothing much for today, right? We've already done with most of the news. In just over an hour, we have the investor confidence number for the Eurozone. Doesn't look too flash. Not to worry about that one. Not something I pay attention to or pay much attention to. And then final wholesale inventories for the US at 10 p.m. GMT plus 8. Again, not something I pay much attention to. Through to tomorrow, not much all the way until 2 o'clock, where we have the UK employment numbers, claimant count change, looking to go from 135K to a 95.5K, with unemployment rate slowing down slightly from a 4.2 to a 4.1%. So that's what we're looking for tomorrow. For today, I do think that it's going to be a little bit more of a trending scenario. I think that you might have some small trades. I don't think we're going to go for big moves today, but it's going to set up more for the later into the week, where we have employment numbers to be released, we have GDP numbers to be released for the UK, we have CPI numbers, especially for the US. That one you want to pay a lot of attention to, because it looks like it's going to go from a 2.9 down to a 2.6%. So pay attention to that one on Wednesday. And then on Thursday, ECB with their interest rate decision looking to go from a 4.25% down to a 3.65%. A relatively significant cut to come from the ECB. So watch out for that one. Okay. I might do a live trading session with you guys on that as well. So look out for that to come. And then a bit of a break on Friday through to Saturday. And then we have a bank holiday on Monday next week. Right. So with all that said, let's look at the charts. Dollar index right up to that trend line right now. Okay, look at that. Dollar rises, but Fed rate cut bets limit gains. I think it is going to limit gains. I think the limit is not right here. I think the limit is still at that resistance level that we've seen. Right, so big move to the downside. That big move to the downside, you see that. You see that 38.2 forming at 102.20. From this second stage move to the downside, you see the resistance forming there at 50% retracement level. So at this point, what I would highlight is that this whole area is going to form as a good strong resistance level for the dollar index for now until it's broken, right? So that's what we're looking at here on the dollar index. There we go. That makes sense. Okay, I don't have that red. Let me change that line. It's a bit too annoying. I put that line there just for the Fed rate decision. Want it a bit smaller. Okay. Right. So today, dollar index, 9th of September. Dollar index having done all that for the non-farm payrolls bounced off that support level to push up. If you're looking at this, I don't think we'll see a level. Let's see, 61.8. So it's broken that 61.8, that's done. We'll take that away. Right now on the dollar, what you would be looking for would be a continuation, right? It's pushed up. We're seeing it bounce. Okay, I'll take that away first. You've seen it come down, test this level, bounce back up, test this 100.55 level, and push right up to that resistance level at 101.90. It's tested that level, came right back down, tested the support again, now pushing back up. So it's only natural what we'll be looking for here, okay, is for the dollar index. Currently, take that away, at 101.50, just below trend line, bearish trend line. Okay, so it's right there, 101.50, just below that bearish trend line. We're looking for it. If trend line broken, could trade up to resistance of 102. Okay, so that's what we're looking for. At this point, where am I? At this point, if this is broken, we could see it trade up towards that 102 resistance level. Okay. I'll keep that, I'll maintain that. Rather, I'll keep it simple and think about that. I'm just thinking that, yeah, 101.60. Yep. Okay, I'll add that in. Broken and above 101.60 could trade up to the resistance level. Okay, relatively straightforward, quite simple, keeping it quite simple in this case, because I don't see it testing and rejecting back down. I don't see it pushing right back down with no major news on the dollar for today, right? Despite, and this is where you got to be very careful. There has been a lot of talk, right? We're talking about short bets against the dollar continue to pile up. We're talking about that news that we just saw, dollar rises but limit gains, dollar steadies. There is a lot of chatter and talk and rumors that that kind of suggests that it could reverse from here. I want to kind of follow that trend and just look for it to test that level before maybe turning back down again. Okay, so I'll keep it simple for now. Short term, dollar strength to continue. Then with that, we look into the Kiwi dollar. All right, so had that upward channel, tried to break up. You see that it tried to break out the channel, came right back in. So that did not trigger. Take that away. Channel is done as well. Now that it's broken that channel and this level, I'll take that away. I don't need that. And it's broken 38.2. It's coming down to that 50% retracement level. What you would be looking out for in this case here, again, remember, not expecting big moves at this point. You see again, Bollinger Band still within, so it's good. So I'm looking for this on the Kiwi. If it breaks below this point that we saw on the 23rd of August and again on the 21st, it needs to go below that point, 6130, 6130, 6125, 6125. Stop loss would be 20 pips. take profit, tight 40 pips down. 61.8 is there, but I'm also looking at that swing level, what kind of swing levels at those points there, down to this support level that we identified previously. Okay, so that's what I'll be looking for on the Kiwi. Anticipating that dollar strength to push up. 6125, 20 to 40 to the downside. Take that away. Sell 0.6125. Stop loss 20. Take profit 40 to the downside. That's going to should take a little bit longer to develop. Then onto the Aussie dollar again. That if I move that right across, you see it came up out of the Bollinger, didn't close outside of the area, came right back down again. Okay, breaking that trend line, we'll take that away. And again, if you look at the Kiwi dollar, that TSRI MACD is just crossing to the downside. That's also, if it does push down, we're going to see that crossover. Good sell signal. Very similar on the Aussie dollar, right? So if I took that and put in 61.8, you see that it is right at that 61.8 level right now. Take that one away. Okay, so we have that. I don't actually need this point. So we're looking at Aussie dollar. Pushed up, broke 50, right at 60 now. If it breaks below 61.8, forming that crossover to the downside, what you could be looking for would be 6550. Stop loss 20 pips. Take profit. You get a good 70 pip move to the downside. I just want to check that level. Those support a bit of an overlap here. That all makes sense. Quite happy with that. You could have it a little bit higher at 60. I think that would be reasonable. Okay, so that's what I'll be looking for on the Aussie dollar. 6650. Stop loss 20, take profit 60 to the downside. Looking for this to push up. So that changes the picture where we're looking at sell at 0.6650. Stop loss 20, take profit 60 to the downside. Does that make sense so far? Let me know, put it into the chat. Then was highlighting this onto, so we saw that reaction. Okay, was highlighting this on the Discord channel. Again, if you're not on the Discord channel, what you need to do is check out the description below. The link for my mailing list is there. Jump onto that. I'll send you the Discord link. Because I was just highlighting this, right? So on the Aussie Kiwi, we were looking for it to come down to test that 1.08 level. We were looking for a reaction at this point for it to break down or bounce up. It came very close to breaking down, didn't trigger, and it pushed right up. I highlighted this move at 2 o'clock just before this session. It's still pushing up. I didn't get into this trade, but it's still pushing up right now. Right? So if the Kiwi dollar continues to push down, right? If the Kiwi dollar continues to lose ground against the US dollar and the Aussie dollar sits there for a little bit longer, we could see this continue to push up. Could very well get to that 50%, that 50 pip target level for now. If you didn't get into this trade already, don't rush in. What I'm looking at this point, or what you should see at this point here, is do that. Okay. We saw a move down, test, and then it's pushed back up. I think that it could push back down a bit and then go back up again, possible. right? But at this point, let me put a dotted line there, right? If you didn't get into this, not right now, what you want to see is if it breaks above that 1.0850 level, then we could be looking at, so give it a bit more space, 1.0860, a tight stop, 15 pips even. The take profit could go up to 35 to 40 pips to the upside towards that previous level, which is also that 38.2 retracement. And if it breaks that, then you got further upside towards 61.8. Okay, so nothing yet on the Aussie Kiwi, but we're looking for it to push up. Then you also see a bit of a double bottom to push up. I was highlighting that. I was going to highlight that. Um, that kind of move. That invert, a bit of an ugly inverted head and shoulder, but we have that breaking the neckline to the upside, right? So we're looking for that to push up on the Aussie Kiwi. Yes, it does look bullish for the Aussie Kiwi, but you don't want to be caught. The thing here is that you see how it's slightly outside the Bollinger. It does at this middle level, right? At this 1.0850 level, if I drag this right across there, you see that it's in an area where it kind of tries to develop a move. So it could be a little bit undecided at this point. So you want it to break out of this, then you could see a move to the upside. Okay, so don't rush in right now. Let it develop. Does look bullish to the upside. Okay, right. Then on to the pound. I was not happy. I missed this move. This was the one that I was talking about earlier. I was watching the yen. I was trying to find something on the yen. I was trying to find something on gold. I was looking for the euro as well. Right? I was looking for the euro. Didn't happen. Then I ended up missing the move on pound, which actually moved exactly as planned. Right? It moved exactly as we had planned. Let me know if you did get onto the pound dollar to the downside because it pushed up right to where we said it would get to 1.3220, and then it pushed right down, breaking that trend line to the downside 1.3170. Right now came to that take profit at 80 pips. Right, so this was a total um, was a good trade, a good setup. I didn't get into that one. Let me know if you did. So I'll take that away for now. Okay. But I see Diana saying about the Aussie. We'll come back to the Aussie Kiwi for a while. We'll break the level at 1.0849. 1.0849. Yes, you break and go back to 1.0830. I don't think you'll come back that much. I do agree on the move. I don't think you'll come back that much. I think you do that, and that. But yeah, I do tend to be a little bit more carefree or more conservative with that zigzag. It could come back down, but I think that it might just come down to 1.0840, not 30 as much, but will be, I think it's still at that level that we're looking to get in. Let that whole zigzag move happen in that area before it breaks up, and then we could still look for the upside move. Super. Okay. Then back to the, with the pound dollar dropping that way, look at what happened on the euro pound. We'll come to that shortly. Um, Pound dollar pushed up, tested 61.8, came right back down. Trend line broken. Take that away. Down to this support area that we've been talking about. I don't think it needs to be that big and fat. Let's see, down to that point. Yep, I think that's good. I think that would be a good level to have it at. 1.3045 would be reasonable. Okay, I'll take this away. I don't want that big blob there. Now with that move, we'll take that away. We don't need that. Okay, we'll consider this point here and this, this level here. Okay, so what I'm looking for here on the pound dollar is do one more thing. There you go. That makes more sense. Okay. What I'm looking for here on the pound dollar is, remember, dollar index, we're thinking that it's going to push up within this area. If it breaks up, could climb towards that 1.102 resistance level. Same thing, if the dollar pushes up, it's going to pull the pound dollar down, but it's currently at just below 1.31. If this level breaks, we could see it trade down to the support at 1.3045, right? Not something that I would be very keen on trading, right? Down to that support. What you would be looking for is how the dollar index reacts to that 102 resistance. If it hits and turns right back down, then we're going to see the pound dollar hit and bounce right back up. It's in that boring range that we have there. So that support level is going to be quite crucial at 1.3045. We're going to see what happens there. I was going to just say watch for that support level. I'm just thinking that whether it's more likely to bounce or to break, and we don't really know. There's no big news. And we're going to see what happens. Okay, so with the pound dollar, with the pound dollar, what we want to do is watch for break of 1.31 and support and reaction at support level of 1.30 something 45 or 5, right? I'm pretty sure many of you would be thinking that you could sell down from this point, 1.3080, stop loss 20 pips, take profit 35 to the downside, possibly on a 1 minute, on a 15-minute time frame. Yes, I wouldn't consider it on the H1 time frame. Okay, but I want to see that come down towards this support. And then look for reaction here. The best move will be a break to the downside, but I don't see that happening so soon. I'll be looking for that kind of big move down. Would love to ride it to the downside on the pound dollar. Okay, so that's something to watch out for. On to the euro. It bounced around so much. Trend line broken. We're taking away a lot of levels because that didn't trigger. That one's done. Take that away. Those are all done. It held. 61.8 was held. Take that one away. Now, euro dollar, I like this. Earlier this morning, I like it to the downside. I was actually looking for it to break. Where was it? I was looking for it to break that point there, that low there, right? And it only did it at about 1 o'clock. I didn't get into that. I was recording videos for you guys, right? We will launch that soon. So I didn't catch that to the downside on the euro dollar. We're going to see it come down to 38.2, break that level. I do think, right? Remember again that we might be coming to the point where traders, investors, participants in the markets are going to start thinking about the rate cut to come from the possible rate cut to come from the ECB, pricing in some weakness onto the euro dollar for that to push down, right? And if the euro dollar pushes down strongly, we could see the dollar index push up, but that's what we look out for. So euro dollar, I would be looking for it to break below. I wouldn't go all the way down to this point here, although that's where we bounced off, because you're seeing that momentum push it to the downside already. So I think that if it can break below 1.1035, stop loss would be tight. No, we can even do 15. The take profit will be down to 35. I will go down to this 50% level at 45 pips to the downside. And if it breaks that support, you could see a big move lower as well. Okay, so that's what I would look out for. Bollinger Band, it's just outside. It's going to come back in slightly. So what it looks like is going to happen is it's going to sit there. It's going to do that, and then do that, and then do that, like that. Maybe to a little bit more extent, again, a bit more volatility, but that's a general pattern and fashion that I'm looking for it to move to the downside. Okay, I like how it's rejected these levels. So I'm looking at more downside on the euro dollar. So 1.1035, 15 to 45 on the euro. Sell at 1.1045, 35, 15 to 45. 1.1035, stop loss 15, take profit 45 to the downside. Then on to the euro pound, right? It's been super undecided. We were talking about this. Look at the euro pound. We were looking for it to. Every time I look at this, I laugh. Right, we're looking for it to break. It broke out of that area. This was on Friday, right after our session on Friday. It pushed out. We were on the Discord saying, "Hey, Diana, look out for this," and we're all looking out at a possible breakout on the euro pound. It came close. It came right back in again. And then on the news, it came right back in, and then after that, pushed right back up. It's still sitting right across. At this point, I'll tell you that I'm not super keen. This pair is gross. It is. All right, I'm not keen on the euro pound. It's super. Look at that. I can just draw a little box and it'll cover up all that. Right, since Friday at 11, it's been sitting across for today. I'm thinking if remember that the pound dollar has a little bit of space to the downside towards support. The euro dollar has a little bit more space to the downside towards its support. So what I'm thinking on the euro pound, it could do, and I might be jinxing it once I say this, it might just spike right up after I say this, is that I think that it could actually come back down and test this support level, right? So it's pushed down, it's set right across, set slightly and across. It looks like it could push to the downside and push down towards 0.84. Wouldn't get into a trade at this point. I want to see what happens at 0.84, maybe by the bounce back up. Right, so euro pound, don't do anything, possibly consolidate, look for it to possibly break down to 0.84 support level, then we're going to see a better reaction. All right, so I'm going to forget about this for a while, maybe for today. Then looking at the yen, I love how this moved, right? So the yen was absolutely a scalping session on Friday. Right, it was a scalping session on Friday. I didn't get into any scalps, but it was just too volatile, right? Because it shot up. First, it shot up. I'll show it to you on the 5 minute. time frame, because I get a lot of questions about how to scalp the news and how to, about scalping. So I want to show you this, if I may just digress a little bit. But this is the yen, right? On release of the news, it was just before. This was just before the news. It was at 1.4325. No, 143.25, right? It spiked right up to 144. Didn't close above that round number, so I didn't get into that. Came right back down to 142.40, continued down a little bit before pushing back up and then pushing back all the way up. It looked like, on hindsight, anyone else would have looked at this and told you, oh, if you sold here, you'd have made however many 100 pips. But within the minute it's gone up and came right back down, you wouldn't get into a trade. Remember that those of you who have gone through some live trading sessions with me, scalping sessions, I always look for that kind of move to the downside on a news release, right? And I would look to either sell on a turn, on a break on a turn, and then a break to the downside, or breaking that level, then I'll look to sell it down. So it didn't play out, right? It pushed right down, it turned back up, it had a small move down, but if you look at that, oops, yeah, if you look at that, right, it's just pushing back into the Bollinger. So I wanted to see it break that level. And if it did break that level, I wanted to see it break this big support. Remember, we were talking about this support, I think, earlier last week, where it's at a key level it could bounce from, right? So it didn't do that. It pushed right back up. Again, on the M5, you see that it came down, pushed right back up all the way, came right back down again, and tested this level. By this time, I wasn't even looking to do any scalps. I wasn't looking at any trades because it's just kept within this range. And you know that now, at this point, you know that this is a very strong support level. Okay, so back to the current. Where am I? Back to the current level, you see that what we talked about previously, 142 and 141 being that big support area where it bounced off on the 5th of August and right across to December last year, where the yen bounced off, it's pushing back up. Okay, so now at this point, I digress. I like to talk about the yen. Bear with me on that. There was one thing that I saw about the yen where, yeah, Fed and BOJ policy divergence points to sub 140 coming from FX Empire, maybe from some other analysis, right? Sub 140 is that it breaks this 141 level. Yes, if it breaks 141, we're going to see big downside. But for now, if you look at this, right, put in our levels. I just realized I just went on and on about the yen. I can't help it. Okay, if you look at that move down, it's come right up to that 23.6 level. Again, we're waiting for the dollar index possibly to push. Look, it's reacting to that level now, right? Possibly to push back up. What you're going to pay attention to is this point and that whole area here, right? That whole area, that 38.2. If the dollar yen pushes up, take that away. No, okay, take that away. Keep that. Okay. If the dollar yen sits there and pushes up past this point, then your next level you're going to watch is 50. What I am actually looking for is a test and a reject back down. We've seen it happen once here on the 5th of September, a test and a reject. You've seen it happen once again on Friday, last Friday. So I want to see this push up, test this level, and reject back down on the yen. I know we've been talking about a lot of dollar strength scenarios. I'm thinking, what if we see the dollar reject 1.143.30? Stop loss will be about 50 pips. Take profit will be down to 120 to the downside. It's already sitting there. It looks like it might not even get to that high. But if it doesn't, then don't rush into it. It's just right in the middle. I do want to see it test and reject to the downside. So 143.30, 50 to 120 to the downside on the yen. Okay, possible bounce. We talked about that. It bounced. Now we're talking about yen. We're looking to sell at 143.30, stop loss 50, take profit 120 to the downside. That's what I'm looking for. It looks like it might not even survive that move up, but we'll wait and see. Okay, then on to the euro yen. Diana said waited for 1 week and nothing happened. That's the euro pound. That is the euro pound. Okay, euro yen. Euro yen, euro dollar with that downward potential. Yen struggling already. Euro yen still showing the downside. If any of you caught that move, you would have hit a stop loss on what we talked about on Friday. That's with how it pushed down after the news. You should actually have, if you had that order, if you were looking at that, you should have cancelled it right after that news, right? Because it's already pushing up, it's gone crazy. You should cancel that move. Now, if that comes back down and breaks this 158 level again, dollar yen possibly pushing down, euro dollar possibly pushing down. Again, I would be looking at 157.80, stop loss 50, take profit 140 to the downside. That's what I'll look for on the euro yen. I'll keep that same view. Look at that, that's just sitting across. You might actually go a little bit lower. 157.80, 40, 50, and 140. Give it a little bit of space. I think it's going to consolidate. It could consolidate and then push down. Then onto the pound yen, right? Very similar pattern. Look at it. Very similar pattern to the euro. Push down, bounce back up, sitting across. Pound yen, push down, push back up, sitting right across. If you got into that, again, should have cancelled right after the news. But it could have made some money to the downside. There was a good almost 100 pip move to the downside there. It's pushing back up. That support is now your resistance level. That big move down would coincide with your 23.6. That one's fine there. I'll keep that. I think that could be 50. There you go. So that's your 50% level. 38.2. Okay. So now I'm looking at this pound dollar struggling already at this 1.31 level, showing a little bit of a bounce. Dollar index not liking that trend line. So pound yen, you could be thinking that if the pound pushes, you could, as a bit of a speculative move, 188.35. Stop loss would be about 50. Take profit back up to that 50% retracement level at 150. A 1:3 to the upside. Remember, it's a counter trend. There is that level and at 50%. You could even do a 1:2 to the upside as well. Okay, but you can look at that on the pound yen as a bit of a counter trend. It does need to break above that resistance back up. So this doesn't fit with what we're thinking on The yen, we're thinking push up and back down. Euro yen, we're thinking it's going to sit there and possibly push down. As an alternate scenario, if we're entirely wrong on both, we could be looking at the pound yen breaking above that resistance to the upside. Does that make sense? All good, all good. Put it into the chat and let me know if it is all good. Then to that, we look at the Sweezy, right? It's found that good reaction at 0.84. It didn't break to test that support. It did find that point and push back up. Now at this level, finding a bit of a double bottom, pushing back up right in the middle of that support and resistance level, that support and resistance level. If you look at this, 50% right now, you want to see, oh, 61.8 would come into play as well. 61.8 is right there. So that actually makes a bit more sense. How it's tested and seems to be rejecting 61.8. That might explain, or this might explain a push back down, might explain this pushing back down. I wouldn't want to sell it. It's right in the middle. If you're looking at 8450, stop loss 30, take profit 50 to the downside. Could we go a little bit earlier? 8455. I think 8455 would be a bit too early. You could do 8455 and 25. You might do a 30 pip stop on that. Like that. Right? I think that there could be a little bit of a push and then that to the downside. So 8455, 30 to 55 to the downside. We did see that reaction, so that's done. Sell at 0.8455, stop loss 30, take profit 55 to the downside. And then look at what happened on the CAD. Look at what happened on the CAD. Remember again, on Friday, what we saw. Where are we? Okay, I saw your question there, Ronaldo. Let me get to that shortly, Ronaldo. Remember again, CAD, we saw bad numbers, unemployment rate to a 6.6%, employment change 22.1 instead of 23.7, although it's an improvement from the previous, but it's still lower than anticipated. So weakness on the CAD with, you see the strength on that dollar. That's why we saw the loonie bounce off that 61.8 level, broke that trend line and push massively to the upside, right? That was right on the news, went straight to the upside. And as it found, I can take this away, as it found this area now, it's finding a little bit of a top just below that 1.36 resistance level. I would, in fact, I don't need that. I don't think that upward move is done. Right? I would think that if the price, if the loonie stays right above 1.355, if it stays above 1.3550, we could still see it test that resistance level. Right? So I think that is going to consolidate in this level for now. Could see it test and bounce to that resistance. if it does break down, then you want to see the dollar index pushing down as well, right? So basically what I'm looking for here on the US CAD is either to go 1.3540 down, so stop loss 20 pips, down to at least 60 to the downside, or I'll be looking at 1.3585, stop loss 20, take profit. Oops, what am I doing? Hang on. 1.3585, stop loss 20, take profit. You have a good 100 pip to the downside. Right, so CAD going to consolidate first. Where am I? CAD consolidating, could retest resistance at 1.36, but we're still looking for the downside potential. For downside potential. Okay. Now, to Reynaldo's question, if the prediction of rate cut from 25 basis points changed to 50 basis points, why is the market moving up? Should it move low? Actually, no, it's gone. It's actually not gone. Well, it was, right? If you look at this 1 month ago, it was a 50% chance for a 50 basis point rate cut. It's down to 27% right now. Even a week ago, it was at 30. Right now, it's down to 27. So it's actually a lower chance of it being a 50 basis point rate cut, a higher chance of it being a 25 basis point rate cut. And that's why we're seeing some upward move on the dollar index. Okay, and then also the priced in scenario, right? Because since well, at least since a month ago, based on what we have here, but I think even before that, since the previous the meeting, we've already seen a very high likelihood that the Fed Reserve was going to cut rates in September. So we came to that priced in scenario where markets have been selling it all the way down, anticipating that rate cut of 25 basis points. So if it does come out at 25 basis points, they've already done the pre-selling. That's why we're seeing some upward move on the dollar index right now. Okay, I hope I answered your question there, Renato. It possibly was 50-50 for a while last week, but it's now a good 73% chance of a 25 basis point rate cut. No worries, you're most welcome. Good question. Then with that, yeah, next one we're looking at gold. Right, look at gold. Look at gold. I was so happy. Right, on release of the news, here, it shot right down like we expected and pushed right up to that resistance exactly as planned. Right, in a shorter time frame, like within that 1 hour candle, it did that. It pushed down and bounced right up to that resistance. Pushed down and bounced right up. So we take that away. Then, after it tested that resistance, it came crashing right down and came crashing right down almost to 2480, that support level. Before we said it was going to bounce, it came down to 2485 and started pushing back up again. So again, very happy on that. I did not get into any of this. Friday was not one of the days I traded because as it pushed up, I said, great. My first anticipation was for it to get up to that resistance. I was looking to see whether it's going to break that resistance. It was way out of the Bollinger Band. It came right back in. I thought maybe it's going to find this point and bounce back up. The next moment, it came crashing right down and it was out of the Bollinger, but by then it was too late for me. I think we were even talking about this on Discord at 11 or 12 o'clock. I think Diana was asking about, I can't remember which currency pair or whether it was gold or some currency pair. I said, nah, it's a bit too late. I'm done for the week, right? So that was that whole move on gold. Moved almost as we planned. And right now it is sitting at just below 24.95. Oh yeah, pound Kiwi, that's right. It's sitting just below 24.95 with a bit of an upward potential. Take that away. Check this move down. Put all that in. Breaking 23, breaking this point. You want to see it break above 2500, still say 2500 to that upside. I will. Once you said pound Kiwi, that was the next one I was going to look at. No worries. So 2500 will be right there. So if gold can break above 2500, that means we're going to see dollar index push right back down. Look at that. So if it doesn't like this trend line, we could see it come back down again. I think it's going to be a little bit too preemptive for this. But I want to see that break. So above 2500 could trade up to 2515, just around that area, right? So gold, what we'll be looking for, gold, what we'll be looking for is, went right down to 2480. Break above 2500 could trade to 2515. Straightforward. All right, and then it's trying. It's trying. So something I'll be looking out for as well. And it looks good. TSR MACD crossed up. It would have, if you followed the TSR MACD, you could even have got in at 4 a.m. on Saturday morning. You wouldn't be able to jump into that. Then again, as it crosses up, you would even be looking at it at 2 p.m. a couple of hours ago. All right, now it's pushing to the upside. New candle formed. Pound Kiwi. Pound Kiwi breaking higher above that 61.8 level, pushing up. Next point to pay attention to will be there. We spoke about this late August. Hang on, I don't need that. I don't need that level. I want to pay attention to that because of these points. That one there. Hang on, let me just do this again. No worries, no Achuku. That point there. Well, you definitely have that and that to pay attention to. So what you want to see is that it breaks above 2.1350 to trade up to 2.15. Quite straightforward. 2.13505560. Give it space. Stop loss would be 40. Take profit, have 130 to the upside. I think that makes sense. You have a hesitation level at 2.1417, which is about 50 pips. So you have a 1:1, and if you break past that, you have a 1:3 to the upside. Okay? Alrighty. So it feels like there are quite a number of opportunities, quite a number of setups to be had, but it doesn't look like any of it is going to be ready right now. Also remember that today is a bit of a low news kind of day after a big news and big reaction Friday that we had last week. So it's likely that we're going to see a little bit of consolidation, completion of the retracements before a continuation, right? So please remember, trade well, trade safe, and leave a comment. Let me know what you think about it, and I'll see you all. Take care now.